Next up, we're going to hear from CV Check and their CEO, Rod Sherwood. So, Rod, please.
Hi everyone, my name is Rod Sherwood. I'm the CEO of CV Check. We're a company that's been listed on the ASX, and I don't seem to have a presentation. Here we go. So we've been listed on the ASX for roughly 2.5 years. I came in as CEO after getting the company listed. I was working in a finance capacity before that and joined the company as CEO in November 2016. So got a little history about the company here. We're an HR tech company. In our case, we evolved out of the background screening industry. We go and verify information at source globally. Our platform is proprietary. There's several hundred years of code involved in the platform, and we provide information such as criminal history, credit referencing, bankruptcy, director's interests, and a whole range of other checks to do with employment and licensing. We currently process checks for 250,000 people per annum and supply a fairly large market. The platform is proprietary. We're a B2B provider. We have a whole range of issues to deal with regards to Privacy Act, so the platform is compliant with those. Hyperscalable with cloud-based technology. Very much about workflow automation in the check process, and nice and flexible for our corporate and individual customers. Since we listed and started commercialising the business, we've now established 3 key segments. Corporate market, very much a high volume user, very engaged, ultra low churn. The SME market, again, is a repeat customer, deep engagement generally for a firm of that size, and we see about 10% churn, which is more to do with the life and death cycle of those businesses. And then we have a separate segment, which is individuals who may need it for professional services, such as a physio needing a criminal history check to get into a hospital. We've got strong momentum now. Our revenue year to date is 11.4 million, so we can expect to go well north of 12 million. We spent most of 2017 repositioning the business to focus on corporate and SME servicing, and that's showing in our revenue growth and gross margin this year. In our case of the corporate and SME revenue, we had a record quarter in Q3. Our growth annualised was about 25%. The current quarter, to the end of May, we did 42% year-on-year growth. So it's accelerating. We have our own direct business relationships with our customers, and that's an important feature to our technology development. We also partner with certain firms such that they can benefit from our branding. So we have PageUp and another group of HR platform providers that use us. Technology is a key driver of our scalability. We're very much cloud represented. AI is a key feature of what we currently use now for pattern recognition and identity, and process automation is vital for the scalability of our operation as we grow. And that story in terms of our customer growth is borne out here. If we look down to the bottom right-hand corner of the screen there, you can see the story. Corporate growth is a key driver of our business, and that's now showing out in the rest of what we do. We have seen, through our work in 2017, we've seen an acceleration of customer referral. Our corporate and SME account growth with lower spend has doubled this year, and that's by virtue of really strong customer engagement. In New Zealand, we're also benefiting from government contracts where we're an exclusive provider of legislated mandatory requirement screening for the hospital and childcare worker sector. That's currently in the second phase of rollout, and we're benefiting from that in this current quarter. So how have we gone since the float? You can see the blue section on the bottom is our marketing spend. So we concentrate our efforts on establishing our brand in the first 2 halves. Thereafter, we turn that down and focus on customer service, driving where the business would go, and repositioned during FY17 such that the company was very much a corporate and SME focused company with very good individual candidate management. And we're now starting to see the fruits of that where we've got top-line revenue growth, very much rebased our cost base in terms of percentage of revenue, and that's flowing through now into accelerated top-line revenue growth as well, with the effect that our cash burn has dropped markedly through that period, and we're now at that beautiful inflection point where cash can be reinvested into the business to accelerate growth further. So that's pretty much a wrap. Company overview here. We've got details of board, senior management, and some history about our current financial metrics. Thank you.